Hi everyone. Today is Thursday, March the 13th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My apologies about no video yesterday, just a lot of early morning technical woes, but we are back up to speed and stepping into what, the PPI? Is that right? What is today? Thursday. Jobless claims, 8:30, PPI. Yeah, that's what we've got. We do have a Fed meeting next week, but as Don Kaufman of Theo Trade says, that may as well be 1,000 years from now. So, what are we staring down? Well, we really are trying to lift off of this zone in support. As we stare down the E-mini S&Ps, we can see that we are at the open of yesterday. Bounces still selling off. This is good that we are holding trend. I know a number of us have stepped into short positions, and the reflexive rally yesterday, continuing off of the 2 days, is making us feel a little queasy in terms of what's happening. However, these pullbacks are making, at this juncture, higher lows. So we have a couple of things going on. Operator error, of course. We are looking at those potential higher lows. Where could we drift if we are staring this down? So here is the momentum indicator. I don't like using the word oversold or overbought simply because that doesn't actually happen until people stop selling. And so there was a lot of chatter on X, and right now I can't get into X. I don't know why. Obviously, it's been under a few cyber attacks for a few days, and you know, that's what you get when you leave broken glass. But in any case, I can't get into X, so I don't know what might be going on in there. What we do want to see is if we have a reflexive fade, where might that come into on our daily formations? So here we are. Area of balance is very wide. We had, some people way back here. We're talking about an inverted head and shoulders pattern. You know, I don't play those sorts of things. And so what we want to see is how well the shoulder holds at 54.30 to 54.09, right? You might go, holy cow, Emery, that's 150 points below us. I know. So what we are going to see is that this is an area of balance between 55.34 and the top edge at 54.48. And so really, I mean, that is a reasonable place for us to expect bounce action into and then out of that space. All right. So what's happening? Every bounce is still getting sold on the bigger time frames. So the big bounce action, which could be reflexive long, and if you've got size, it will make a great snap trade. But if you aren't able to do big size, you're just going to have to be pretty careful about where you position and go in for quick strikes in and out. So let's go to the 1 hour. I spent a lot of time on the ES rate there. Let's take a look at what's going on with the Keltner band on the hourly chart. Notice this is the opening candlestick formation. Where is the low? 55.95. Where is the high? 56.11. So what do we know? Write those numbers down. Because what they are going to do, and I'm going to move this up here a little bit, what they're going to do is tell you to look out to see if they try to move up, and if they can't, realize that they're going to head to a lower low. This is value area low. We are in a downward sloping, what is that number? That's the VWAP, down to flat VWAP. We are making higher lows, and so we know there are buyers beneath us trying to buy these dips. So what does that mean? Don't short the low. That's what that means. Don't short the low. Yes, it's a slight trend, but wait for the bounce to get into a short. So what is that number? 56.11. Every single big bounce is getting sold, folks. Even as we try to hold these lows, any reflexive action, somebody's stepping on a neck. All right? So what shall we look for? I'm going to move this number up to 56.44 and some change. That's what we're staring down. Bounces are sell zones. We're in the middle of the momentum track, meaning that we've got waves that test the balance area low and bounce and then reject the balance area high. That's what we're staring down. The NQ. Whoa, that's noisy on the 1 hour, isn't it? All right, here we are on the dailies. Same sort of thing. Higher lows, big fade, and now holding the edge, right? So yes, we have volume, but we don't really have continuation, right? We have volume pressing us down. To me, this is the reflexive bounce in play, 19,775. Of course, this was from day before yesterday's video. These are still the same numbers, right? It came right into that area, rejected it. Look at what we're holding today. I'm going to get rid of this Fibonacci. Look at what happened. We came into the open and close of 2 days prior, and we're trying to bounce. Essentially, though, that means we're in an inside candlestick formation. So the traders are going to have a fight club at the lows near 19,400. They're going to try and bounce off of it. And the highs at 19,775, they're going to try and bounce down from that space. So that is the region we are staring down on the charts. I'm going to, nope, not that one. Yes, that one. Actually, I'm going to remove both of these. Daily formation. Maybe I'll pull that down here. Between support and resistance. 20,300, 20,316. Let's go to the 1 hour chart. Have a look at this, right? We're making higher lows, 400. I'm going to take 370 out of there, right? So what's going to happen? We're caught in a balance zone. Clear sellers above us between 775 and 675. And then here, we've got some buyers showing up at 19,401. So the range of motion is, I'm going to remove this one. Let's get it clean. The range of motion is if I can come down to near this zone, stare down those hourly charts here in the NQ. If I get down near these zones, 19,400, I better see a bounce action event. And if I've got sideways action, a la sitting in the middle of my momentum indicator, I'm going to wait for it to come back and give me a buy zone. If you say to yourself, hey, I'm only going to trade at the open or close, the 5-minute open or close around the hourly candlestick formation. Where's my risk? Where's my reward? Here it tells us, listen, here's a bounce. This is a big candlestick. I bounce and I fail. So my failed bounce into the third candlestick in this motion near 19,600 tells me, ooh, this is the hourly candlestick I can short. Now, I can go into the open of this candlestick and I can go, you know what? I'm done with my trade. That's going to be the target. The target is going to be the retracement of this 1 hour candlestick. And so now this candlestick is doing sort of the same thing. So we might want to wait until the end of this candlestick. But as we come into these lows here, if you're saying, well, maybe I can still hold this short, you certainly can. You can take half the position off and then, move your stop to 19,558 and let that hourly rotation do its thing, right? It's all about how the traders respond to the wicks and ebbs and flows of price action here. And we are clearly sellers above, buyers below. This chart is waiting for break action somewhere. All right? And that's what we're looking for. I'm looking for the deep dips to buy. I'll start at 400. If it stops me out, I'll maybe 20, 25 points of a stop. If it stops me out, I'll step to the side and look for my hourly candlesticks to confirm some sort of price action near 19,274. Let's go to the YM. Still fading. Yesterday put in a lower low and a lower high. So what does this tell us? It tells us that traders are flowing out of the Dow, right? And now they are in this balance area, tight balance zone, from the last breakout at 41,168. If we bounce up from that area, we could bounce 500 points, 21,650. But at that juncture, we are still likely to fade because trend is down and momentum is down, and we've got downward Keltner bands. That being said, see the wicks. The wicks here tell us somebody's trying to buy the dip. Someone is trying to buy the dip, and more than a little bit of someone's, right? So what we want to do here is take a look at this edge and say definitively, all right, 21,168, as long as I hold that line, I can try along. Into what? 21,460. That's what we're going to look for. 21,460 to 21,650. This is still very, very bearish. Very bearish. That's all I got to say about that. Could we move down to 40,000? Sure. Absolutely. You want to draw Fibonacci? You could draw Fibonacci on the last wave. Let me, 50% markers, 21,539. The 1.5 is 40,558. Very likely, folks. Very, very likely. All right, let's go to micro Bitcoin. They are trying to hold the lows. As you know, my thought is this is in a reflexive bounce. Those reflexive bounces can carry some heat, right? But for the micro Bitcoin formation, if we cannot breach 85,000, we're either going to sit in the range between 76,000 and 85,000, or we are going to collapse through the range and get into these lower areas of old resistance, new support. And that, folks, is down at 66. Right? Low value node, right? Low volume node, excuse me. Low volume node here, also at value area low. 77,000. I expect a retest of that easily. Right? Here's the 200 on the daily. So what are we looking at today? Well, we're looking at that same thing. Look at the topping formation. It doesn't look very technically divergent to me. So this potentially says, hey, we're going to try and run up the rails here. We are. We're going to try and run up the rails. So what are we staring down? Negative momentum, flat moving average that's tight, and then positive moving average that is the bigger one. That's the 50. What do you want to look for? Retracement of the candlestick to go long. If you're interested, 82,600, the floor. You've got about 600 points as support. If you use a micro Bitcoin, it's not too bad. And then the top area, 85,000. When it gets up here, if this is up and it's above the moving averages and momentum starts to take a turn like this, anticipate a blow off top into the 85 to 86,000 area. All right, this is a gigantic gap, and they are trying to fill it. Not having success thus far, but this kind of action shows that we could easily have a wicking movement. And remember, in this environment, every big bounce is being used as exit liquidity. Do not buy the breakouts unless you are scalping on a very tight time frame. You can try buying the bounce, but it's also going to be the same thing. If you don't get that entry right and you go, ooh, I'll take the bounce here, no, buy a higher low. Do not chase price action to the upside. It will not bode well for you. All right, here we are. Earl. A lot of people talking about oil sitting in very important spots. Hey, we could start moving up. I don't think so. I think we're going to sit right here in this range. We get up to 68. It's good night, Irene. Absolutely. Good night, Irene. If we get down, what is this number here? If we get down to 66 or 65, absolutely watch for consolidation, buy zone. But these big bounces up into here, do not think this is a runaway train. It is not. It is not. A lot of people are calling for the flip side of this motion and saying to themselves, hey, this is bullish action. And price action is going to continue to move. Well, I'm really not so sure, simply because we've got a lot of other things going on. But for the first time in a hot minute, we're above the 200 and we're above the 50, but the 200 is trending down and the 50 is trending up. So look for a retest of the floor in oil around 60. You know what? 66.50. That might give us a nice bounce. That's a safe bounce. You can see that they're trying to hold 67. If you want to chase it out, have at it. But I say, hang on. I say be careful. All right, let's take a look at gold. Gold did a really nice job bouncing above 29.20 and then really moving up in the overnight. Now, I believe this has to do more with the dollar. of what's going on, and a ton of news that says, hey, listen, we're repatriating tons of gold and blah, 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 blah. So gold is in the news cycle right now, and so the pullbacks are going to give us probably really significant buy zones, but 2960 still seems like resistance to me. So if we take a look at the daily, we can see that we're in the hodgepodge of chop. I'll remove this one, right? We got a hodgepodge of chop, but breaking up over 2940 today is a big deal. And there goes into 2960, momentum steep. So look for a blow off top that stops motion. So what does that look like? Let's draw Fibonacci. Actually, I have a Fibonacci here. Never mind. Whoops. Well, ignore all of that, folks. For goodness sakes. We just had the PPI come out. I don't know what it is, but price action is moving up. And that's what we are seeing, right? The price action in the reflexive bounce putting us up higher, but we're still inside of an overall range. All right, so here's the Fibonacci, this wave action event. Let's move that here. The 1.5 is up here at 3,000. If we divide it, it's 29.89. So maybe that happens ultimately. I don't particularly think so. I believe that this is a topping formation, right? Higher high, away from the Keltner band, same rules as a Bollinger. Lots of sellers coming in at the new highs. They can't hold. A lot of wick action, but traders underneath trying to hold the floor. Ultimately, I suspect they fade. Notice they're holding this hourly candlestick at 950. So that's the new floor of the day. $2,950. If it holds, we get to 2960. If it fails, we're back down to 2940. Let's take a look at SPY. Going to the hourly charts, you can see sideways, traders trying to hold the floor, right? This whole chart is in a reflexive bounce. I think we grind higher into the end of the week. I think any deep, savage dips get bought, and every big spike gets sold. So the high in the SPY I'm looking for on a big spike, 567, might not come to me. I might have to settle for 564. Gets up there, I'm going to try and short it. If it comes down into the 555 to 553, I'm going to try a long. This is a sideways pocket of absolute destruction. If you're sitting in the middle of it, wait for the edges and then position yourself. If you take a bounce along off the base and it spikes up and it can't hold, get out of Dodge. Get out of Dodge. If you have a short up here, if we're fortunate enough to get 567 and we enter into a trade short here and it moves 30 cents against you, get out. Get out. You can always get back in. You can always get back in. Finally, let's look at the Qs. This is not a buy and hold and let's see how it turns out kind of market. It's not. Absolutely 100% is not. All right, let's take a look at this. We have higher lows coming into the range, lower highs. Every savage bounce is getting sold. Guess what? What's the key adjective there? Savage. These market actions are savage. And that's what happens when we get under a 50 simple moving average. Right? Support and resistance is the name of the game. Look at this range. 1, 2, 3, almost 4 days sitting in this range. Try it again. If it pulls down here, buy the base, 471. If it moves up here, 482, sell the spike and keep your stops tight. The market will resolve in one direction or another. My suspicion is that it might be down. But guess what? If I've got higher lows, the market's telling me, hang on, Professor, you might have it wrong. Okay? So, sit tight, wait for prices to come to you, and you will be in fabulous shape today. All right, everybody? Take care. I'll see you soon.